Hey everyone, it's Shauna the Tax Goddess, and I am so excited to be here with one of the smartest people I think I've ever met. This guy knows everything there is to know about everything, and you can see him smiling, so he might disagree with me a little bit, but Austin Potenza from May Potenza, here local in Phoenix, Arizona, one of the partners and one of our favorite tax knowledgeable legal experts here, coming to you live on Tax Goddess Live. So, Austin, why don't you tell us just a little bit about you?
I I can't do any better than an introduction, so maybe I'll just sign off right now and we can move on with what you've said.
Oh, well,
I'm
tell us. Yeah, go ahead.
I'm an attorney. I've practiced in Phoenix for 42 years. I'm a certified tax specialist and a founder of our firm, and I head our transactional department.
And so, transactional department, if a listener is thinking, okay, I heard tax, I heard legal, like what are some big key words like, oh, if this happens, you call Austin?
Well, we typically in our part of the practice typically help people manage their long-term business relationships, either with each other, with their vendors, with their potential buyers, with their partners. We do everything from setting people up in business, entrepreneurs mostly, to helping them grow, either organically or through acquisitions. And we help them when they're ready to make their dreams come true and sell their business and go to the beach.
Ah, we love it. Well, you did say you were just out fishing. Now, you're not selling your part of the business to go fishing, are you, Austin?
Nope,
Nope.
nope. I'm just going fishing when I can.
Go and fish. And part of that is the dream of an entrepreneur, right? To be able to take time off when you want to go fishing or go to the beach or do whatever it is, or when you're ready to sell, which I love. So awesome. Okay. So tell me, when would an entrepreneur, brand new, they're just starting, you said you set up businesses. So can you tell us more about that? When would an entrepreneur reach out? Like, when's appropriate?
Well, for starting out, we're in the relationship business, and we're in the business of setting expectations or helping people manage their expectations, set them and manage them with respect to each other. So, for anyone who has partners or co-owners, we think it's really important at the very beginning to set those things out, and we help. Um, you wouldn't believe all of the unanticipated issues that can come up. I'm sure you've seen it
We've seen it.
businesses. And the idea here is while everyone's excited and interested and on the same page, we help them set their expectations for each other, for the group, who's going to do what, who's in charge of what happens if certain events occur, and what happens if it's time for us to part ways. So we think it's important uh, under those circumstances. If you're a sole proprietor, or if you're setting up a one person shop, I don't know that it's as important for us to be involved. There are lots of online services that can help. And, we don't compete with the legal form services, but they're not very good at managing relationships. They're only good at helping set up very, very basic structures. So, yeah, at the beginning of your relationship, we want to be talking to you because we'll help you to prepare for success and for what happens if things don't work out.
And I mean, 100%, we hear these horror stories of, two partners getting into business. And when you're first getting into business, everybody's wearing the rose colored glasses, right? Like, this will be amazing. We're going to make $1 billion and this is going to be great. And then 6 months in, you run out of money. Are you both going to fund the money? What happens if one of the partners dies, right? Does the other partner like the wife of the partner who died? Because maybe you don't, and you want, what is it called? First right of refusal?
Rights of first refusal, options to buy people's estate. Plus, if you're the person who's unfortunately passed on, you want to make sure that your estate or your family benefits from the hard work that you did. So there's, lots of stuff to think about.
Absolutely.
Most of the time, really, it's just like any relationship. Most of the time when there's trouble, it's because somebody had unmet expectations or unanticipated things happen. And when we have unmet or unanticipated expectations, that's when resentments can happen, and and resentments in business result in lawsuits.
And big lawsuits, right? Especially as the business gets bigger and there's more cash, more value involved. Now it makes sense to hire very expensive attorneys to try to go after each other if the documentation is not clear in the beginning. What
Terrible waste of time.
Yeah, waste of time, waste of money, get it sorted ahead of time. So what do you think if you said there were the top 3 clauses in a good, this is an operating agreement that we're talking about, is that right?
Well, yeah, if it's an LLC, it's an operating agreement. If it's a corporation, it's a shareholder agreement. But yeah.
Okay. What do you think are the top 3 clauses? Like if you're about to get into business, you've got those rose-colored glasses on. What are the 3 paragraphs, clauses, whatever you absolutely must have so that you don't get in trouble later?
Well, I think one of them would be what are our mutual expectations? And you notice I keep saying the word expectations. It's really expectations. How many people have ever been involved in a relationship other than business where you had unmet expectations?
I was just about to say, Austin, it sounded like a prenup to me, is what,
Yeah,
what I'm hearing
in
here.
effect, it is. You're getting married in business. What are our respective obligations with respect to contributing money to the firm when we need it? What are our That's one thing I would want to make sure of. What happens if somebody wants out? That's another or if someone, like you mentioned earlier, suffers a catastrophic event, disability, death, and can't be there anymore. That's something you need to do. What happens if the parties have a different idea about when it's time to sell, for example? So control issues over the really important decisions and expectation setting regarding each person's relative contribution in terms of time, money, and then restrictions on transfer.
Love it. Okay, so guys, you heard it here. If you don't have at least those 3 things, you're probably in trouble. Now, Austin, for a brand new business owner that is just about to get into business, or even if they've been a business owner before, but maybe they were solo and now they're getting to a partnership, something like that, how do I know what types of things I need to think about? Do you guys have like a checklist or a deck of flashcards or something I need to go through? How does this process work?
It's interesting. I probably should have a checklist. We use some checklists internally, but Shauna, thank you for that. But what we typically do, and I'm more old school than I guess some of my counterparts, what I would prefer to do, and I typically do this without charging someone, is just talk to them and get an understanding of what it is important to them in terms of the particular relationship they're trying to establish. People in different business relationships, there are sometimes commonalities. Everyone wants to make money. Everyone wants to be successful. Everyone wants an exit someday. But each business and each relationship has its particulars that you can't necessarily capture without actually talking to somebody. So my standard procedure is if you guys are thinking about doing something, or if one of a member of or a partner is thinking of doing something, let's talk. Like to figure out what it is that you're really trying to accomplish, what your expectations are, not only of each other but of us, so that we can make sure that we meet them. And then, you're on the clock once we agree to do something. But I would prefer to talk to people first.
Well, and Austin, I love the way that you bring this up, right? Like I may be more old school with this whole new AI push and everybody thinking they can just go to ChatGPT and replace their lawyer, replace their tax professional, whatever it is, right? There's something a je ne sais quoi to having somebody with years of experience who has seen all the cases and all the ways that things can go bad, and having that discussion is so important. Because you're not going to get that with a GPT, or as you said, like the legal firms that file forms. You're just not going to get that experience and the knowledge. And oh, wait, are you sure that's what you want? Kind of those little bits of hesitations that, as a business owner, you may know nothing about, because the specialties of writing a widget, how to build the widget, but you're coming to an attorney for a reason. So, love it. Gotta love the experience.
We're not there yet. I think the future of AI in the practice of law is very interesting.
Mm.
but we're not really there yet. AI isn't a relationship expert.
100%. And I love the fact that you keep coming back to the expectations in the relationship, because when it comes to, and heaven forbid, but when it comes to a legal battle, it's always about, you broke my trust, you upset me, something happened in those expectations in that relationship. So love the fact of setting it up and getting it sorted ahead of time. That's brilliant. Now, I'm going to switch topics just a little bit, because you have so much knowledge, and I want to make sure we capture as much of it as we possibly can.
You said I know everything about everything, so we're going to have to. I disagree with that, but we might have to narrow it down a little bit.
We're doing an overview today. I love it. Well, one of the big questions that we got from our audience, specifically for you, Austin, was, so great. Now you and I have gotten into a partnership. We've built this beautiful business. We have a great document, right? Everybody's in agreement. All our expectations are met. Everything's fabulous. Now we're ready to sell. What kinds of things do we need to be thinking about, from your perspective, about a sale, and how far in advance should we be looking at getting our ducks in a row for preparation for a sale?
Well, great question. First of all, I want to say that, Shauna, if you and I are in business together, there are no unmet expectations. You're very clear in advance. We are all extremely successful, and our respective life partners are just a little bit sick and tired of how well we get along. But anyway, in terms of your question, so there are. We could spend a lot of time on this. There are a lot of things to consider when you're talking about selling your business. I think the first and foremost is, and we'll talk about when you should get a lawyer involved, but if you have one that you like, a lawyer can be a good part of your team. More importantly, throughout the process, you need a good accountant, you need a good CPA, you need a good tax planner, somebody, maybe all that all may be the same person. But what you have to think about when you're getting ready to sell a business is, what do you have to sell? What's the value? What have you created that's different? What makes you attractive to a potential buyer? So figuring out the value, what is the core value in whatever business you have? If you make widgets, what is it about your widgets that make them attractive to a buyer? Do you have a particularly efficient manufacturing process? Are your widgets more in demand than anyone else? Do you have a better distribution network? And the reason you need to know that is because that's part of the story you're going to tell to potential buyers. So that's one, really understanding the value. Secondly, the things you need to think about are so all of this is about how attractive can you make your business to a buyer. The second thing, and I mentioned it earlier with the accountants, is how reliable, when you present this to a buyer, how can you make the buyer believe that this performance that you have, A, is reliably reported and is sustainable? So for one thing, you got to have great financial statements. If you're going to sell your business, you just have to have reliable financial statements. And, depending on the size of your business, they should either be audited if it's, that's the highest level. And Shauna can talk to you guys about the level of, but, audited is the most, the highest level of review. Your financial statement, let's just assume if you're selling to mom and pop don't care so much about that. If you're selling to private equity very much cares about that, because they're all about the numbers. They need to know that these numbers are reliable, that this EBITDA calculation you come up with makes sense, and that the numbers, that the way they think of numbers, are the same way you think of numbers. So audited, reviewed, compiled, you need to have reliable numbers. The second thing that a lot of companies will look at, so now your numbers are good, they're accurate, there's value in your business. The next thing is it sustainable? Is the success sustainable? So depending, again, on how large your business is, one of the other things you should think about is, what is the quality of that value? And a lot of, for larger business, a lot of companies who are going to sell consider doing a quality of earnings reports. Now, notice I haven't said anything about lawyers yet. None of this involves lawyers yet. This is all about involving accountants. At some point, so and a quality of earnings, and they can be um, reasonably, I mean, it's worth it. They really are worth it. They can be expensive, but not terribly expensive, depending on who you use. Quality of earnings says, given this level of performance, how likely is that to continue? So, for example, if you have a $10 million business, but you have one customer that is $9 million, that affects the sustainability because that customer, something could happen. They could change vendors, so quality of earnings is important to think about. The third thing is um, how clean is your business in terms of what you have to say? Again, this is all under the heading of how attractive. I've had clients who have small businesses, very successful small business, but is the boat, the house in Flagstaff or the Bahamas, are all my kids on the payroll? Things like this, they're not bad, but they don't present a real if they're in the books, they don't present a real accurate picture of what the buyer might be able to reproduce. So you have to look at that and determine how much cleanup you'll have to do before you tell the story to the buyer. Are you old enough, Shauna, to have watched I Love Lucy when you were younger?
Oh, yes.
Okay, so you remember when Lucy would get in trouble and Desi would come in and he would say, Lucy, you got some splaining to do?
Yep.
When you're trying to sell a business, you don't want to do a lot of splaining.
No.
So
Well,
more of this kind of stuff you have in a business, the more you have to explain to a buyer that the picture they're getting of the financials is not really the actual picture. It's much better than that because of all these other things you have in there. So those are things you want to look at. I know I'm talking too long. You have a question?
no, I love it. I have like 8 questions because, of course, on our side, tax side, while you're running the business, you want to put legal deductions, right? But you want to put the boat and the kids and the houses and the cars and like whatever on the financial statements. So how far in advance do you need to kind of stop doing those kinds of tax strategies?
I don't know that you would stop them, and there's nothing wrong with doing them. It's just that the buyer isn't going to want that when they take it over.
You
And
have
the
to be
buyer's also going to want to say, so each of those strategies, to your credit, Shauna, tax goddess, to your credit, each of those strategies has the purpose of reducing earnings, right?
It's the whole point. That's
Right.
tax strategy. Yeah.
And then once you're selling to a buyer, what's your goal? To show higher earnings.
Yep.
So I wouldn't say you don't do those things. I certainly wouldn't advise that. And I don't advise that you stop doing those things if you're going to sell, depending on how you're going to structure a sale. But what you do is you have a very, and I'm sure you do this, Sean, you have a very, very clear picture of what the difference is in the performance of the company with these things in there and without them. And so if you're selling, for example, if you're selling at some point, if you may be selling stock of your company or LLC interests, you're going to want to show what it's like without all of that, and you're going to want to remove all of that prior to a transaction. If you're selling assets, there are certain assets you just won't sell. You won't sell the boat. You won't sell the house in the Bahamas. You won't sell the guitar collection. So there's my guitar in the background.
Hint.
You will sell the guitar collection to me, but so it's a question of timing and clarity.
And I love the fact that you've hit on clarity because it hits on your very first point, clarity of expectations, clarity of what you want, right? Clarity of your pain points, clarity of your needs, clarity of your financials, right? So it's an ongoing theme here, right? Is that you cause yourself trouble if things aren't clear, well documented, organized, have the proper paperwork, whatever it is in the path.
Again, it's all about expectations. When you're doing a transaction with a potential buyer, they have expectations about what they're buying. You want to be super, super clear so that those expectations are realistic.
Love it. Love it. Okay. Well, now let's switch because you're talking about if I'm a buyer. So if I'm a buyer buying a business, right? Obviously, I want clean financials. I want to know what my numbers are. What's the quality of earnings? What other things as a buyer do I need to watch out for so I'm not getting the wool pulled over my eyes?
Oh boy. Well, again, financial information is paramount. The other things that you want to look for, which you can do either through lawyers or through services, is you want to make sure that the people who are selling you the business that you're buying actually own it.
No, that
And
happens. People try to
well,
sell something they don't own. I may be
maybe
naive.
maybe they don't own all of it. Maybe it's
Oh,
indebted. Maybe a bank has a claim on it. Maybe there are old shareholders who have a claim on it. Maybe employees have some sort of a claim on it. So you want to make sure that you're buying really what you're buying is exactly what you expect that you're buying. So
it's almost like a clean title on a car, right? You make sure there's no problems or issues or no liens from a bank or anything like that.
yeah, so or you make sure that those things all if you're going to dump a bunch of money on a buyer on a seller, you want to make sure that those things get paid out at closing, and that happens all the time. The other thing that happens all the time is if a business has any history, they probably have prior lenders. They may have paid them off. Lenders are notorious about failing to remove UCC filings on
Ooh.
businesses. So there are liens that are out there. No buyer wants those. Those liens mean nothing because there is no debt associated with those liens, but they're still there. They're still a cloud on the title. So you want to do that. Again, you're looking at the same thing that I mentioned earlier. How sustainable is this? How important is the seller to the relationships that are important to me as the buyer? Is
Ooh.
this business duplicatable, plug and play? If I bring in Bob, my or Julie, my other CFO or CEO that I intend to plug in, or if I intend to do it myself, do I have the ability to sustain the relationships that the seller had? So you want to look at how personal is the value associated with the business. That's very important. I like as a buyer, I really like an absentee owner.
Because if they can run the business without the owner being there, then you can run the business without having to be there. If you
Right.
want to be there, it's your choice.
But then I
So
have to look. Then I have to look at who does have those relationships. So I may want to make sure I get some key employees involved. But yeah, those are the things I want to look at. I want to look at value. Same issue. Where is the core value? And I'm going to be looking at a return on my investment. So I'm going to be looking at how much am I paying, over what time, what's the cost of money, and how and when will I recapture my investment. And the other thing I want to look at, both as a buyer and a seller, is of course the tax goddesses' tax strategies to make the transaction so that in either case I'm increasing my cash flow. If I'm buying, I want to buy depreciable assets if I can because I can depreciate them. I yeah, and I may want to put my boat in there. Or as a seller, I kind of want to sell capital assets that will result in capital gain, or even better, sell something that results in no gain if possible.
and this is where the IRS comes into these kinds of transactions, right? Is that they always pit the buyer and the seller against each other to try to come up with the most fair transaction. So the IRS doesn't have to go look into every transaction. So when you're looking at it from a tax perspective, the IRS has built the rules to pit you against each other. Are there ever cases on the legal end where that's the truth, where there's some sort of pitting against each other from the buyer and seller, like in a good way to come up with a better
Uh,
outcome?
the you know the tax in this particular area, I would say the effect of the tax laws is consistent with the effect of the market. Whenever I'm selling something to you, Shauna, you want the best deal possible, right?
Of course,
I
yeah.
want the best deal possible as well. So there's a natural push pull that makes sense. This is where capitalism tends to make sense. You're not going to pay more for something than it's worth, and I'm not going to accept less for something than it's worth. And the push pull of our negotiation is how that works. It's the same thing with the tax laws. The tax laws say there's so much tax benefit to go around.
You better split it up. Figure out how to split it
And,
up.
and that's part of the negotiation. And tax benefit just means cash flow. It just means, who gets the benefit of a certain amount of cash flow. So typically, um, in our transactions, it's a negotiated thing. What are we selling? How are we allocating the gain to the assets that are being sold? And the law allows the buyer and seller to figure that out.
And thank goodness for the government staying out of it. I generally like a little bit of freedom for us to be able to do the push-pull. I love it.
Yeah, the only time the government would get involved is there's a particular form you file. I won't mention the number because I can't remember it. But there's everyone when you do an asset transaction, there is a number. There's a form that you file with the IRS that describes how you're allocating it, and as long as both parties treat their for tax purposes, treat it consistent with that and consistent with each other, the IRS will not get involved. And I'm sure there are cases where they do it inconsistently and the IRS doesn't figure it out, but we don't, neither.
The benefits of the IRS not having those 87,000 agents that they said they were gonna, hire, right?
They're out busy getting gun practice. But, you and I both never advise people on whether or not they'll get caught. It's just, if you assume that the IRS knows and sees everything, how does it look?
Yes. I love it. 100%. Okay. Well, I know we only have half an hour, so we have 4 minutes left. I don't want to overstep our time with you. I know. I don't want to overstep. We might have to do a part 2, Austin, because we have another 5 questions here from our audience. But let me see if I can pick a really good.
I'm happy to stay on, but I know you may be limited in time.
Oh, you're so sweet. Yes. Half an hour, so sorry. But let's try and pick the best question. Let me see. I think one of the big ones that's come up, especially with all the changes recently, Department of Labor law rules, there's been a lot of changes on the employment side for entrepreneurs. So are there any, what's the best way, or who does an entrepreneur work with to make sure that they're following all the employment laws, especially with all the changes, 1099s, W-2s? There's always massive confusion on these fronts.
That's a whole different topic, but yes. So fortunately, it depends on the size of your company. Certain companies under a certain size only have to comply with certain laws. Others that are over a certain size have to comply with everything. In Arizona, the things we have to watch out for are always complying with the immigration requirements and the background checking of employees. And if you're ever selling, that can be a monstrous thing to overcome if it's not done properly. If you have relationships with employees that are represented by contracts, you should have a lawyer draft them. The IRS is looking at a few things. The IRS is looking at the proper characterization of employees or independent contractors. The Department of Labor is looking at the proper calculation of employees as hourly or salaried, and it's not just what you make up. And all you need in either of those cases is one person to call the wrong agency, and you've got an audit on your hands. So you need to deal with that. And the other thing, which we could spend another period of time on, is for all intents and purposes, I think you should, unless you're buying or selling a business, you should consider covenants not to compete as dead. They're dying, probably a long overdue death. Yeah, you can't keep your employees from competing. You can keep them from stealing your secrets. You can keep them from soliciting your clients. You can keep them from soliciting your employees, but you can't keep them from competing with you.
Love it. And that's a big one. And as you said, we may just have to hop on a part 2 and a part 3 and a part 4, Austin, because right there, that's a big deal. So Austin, one of the reasons that I love working with your firm, okay, is because you guys, you're a good size firm. You have lots of different areas that if I'm a business owner and I need this kind of help or that kind of help, can you just give me a big picture rundown on the types of things that your firm handles?
Oh, sure. Well, we're a commercial firm. So we have a large group of people on the other side of the building who handle those unmet expectations, the litigators. And they're, have very robust practice in commercial litigation. And then my group does transactional work. So we're always just basically doing deals and helping people set up their relationships and set up their businesses. But I would say that 80% of our practice is actually buying and selling companies. We have an estate planning group. So for folks who need good estate planning, we have some really, really good people doing that. We have a lending practice. So for people who are negotiating relationships with banks and with lending partners. We do that. We also have a real estate practice. We hope none of you ever see this, but we also have a pretty robust bankruptcy practice, but it's for mostly large corporate bankruptcies where we represent either debtors or creditors in bankruptcy cases. And we also have an environmental law practice.
There we go. I didn't even know that one, Austin, and there you go. Very cool. Okay. Well, Austin, I want to say thank you so much for your time today. You are a font of knowledge and absolutely adore having you on. For all of the listeners out there, if you have questions for Austin, you can find his information in the scroll down below, apotenza@maypotenza.com. And of course, you can always reach out to us at Tax Goddess if you have tax questions on buying a business, selling a business, operating a business, reducing profits, whatever it is you need. So thank you so much, everyone, for joining us today. It was an absolute pleasure. And Austin, we can't wait to have you back. Thank you so much for your time.
Thank you, Sean. It was a real pleasure.
Thanks, everybody. Have a great day. Bye.
Are you paying too much in taxes? Our clients only pay 6.92% on average. We've saved over $1.47 billion and had only 2 audits with no change approvals. Let us prove your CPA wrong. Contact us now. Discover the secrets to paying less in taxes with the 6% Life. Get your copy now on Amazon. Follow Tax Goddess on YouTube for more top tax tips and huge savings.